and welcome. And we are going to be talking to the management of Milky Mist. Dr. K. Ratnam, CEO Milky Mist Dairy Foods, has joined us. Hi, good morning and welcome to the show. All right, the stock has listed at 165, giving Milky Mist a significantly higher valuation than at the IPO. What earnings growth and margin trajectory do you believe can justify the current market valuation?
Good morning to all of you. We are a company of a differentiated dairy player. We are not in pouch milk, and we do only the value-added products. And in that segment, we cannot be compared with any of our peers because while the peers are having a PE ratio of 50, 55, we are at a higher level. But market price is based on several factors. So I am differentiating Milky Mist in a different way. It's a value-added product company, and for that, whatever the market has given, it's kind of a very thumping, validation of our the operations.
All right, so FY 24-26 revenue grew at over 30% CAGR, while EBITDA margins have expanded from 12.2 to about 13.9%. Now, how much further margin expansion is possible, and what will be the key drivers?
We will be growing in the range of, whatever we have given in estimation of 33% last, 3 years. We expect a similar growth going forward also. And since, we are into a value-added product things, and there is a lot of, high-margin products like ice creams, yogurt category and all those things. So we expect a kind of a margin expansion going from here. And the growth will come from all the market size, and the growth is also inclusive of coming from all the product categories. So we expect, continue to the momentum of the current growth what we have, sustain the growth, and improve upon our margins because we have got a lot of headroom to play, both in terms of the capacities available, the market expansion, and the great demand from the consumers.
All right, paneer is already a major strength with 19% of organized packaged market share. Now, where do you see the biggest opportunity to gain share from here? Cheese, yogurt, ice creams, or newer categories?
Indian dairy industry, as far as the value-added products are concerned, it is growing at the range of 14 to 15%. Whereas we have been growing above 30%. So that means there is an organic growth of 15% plus than the sector, the value-added products. And while the sector is growing at, something like 7, 8, 9, 10%, we have been growing, we have been at a 3x. That's number one. And paneer, as you know, that 90% of the paneer what is produced in India is handled by an unorganized sector. That means the estimated the value of the paneer sold in India per annum is about 1 lakh crore. And what the the organized segment like Milky Mist has is only 10%. So we have a larger headroom to grow in that. Similarly, when you talk about the ice creams and cheese and yogurt category, of course, yogurt is a new emerging category and which has been growing phenomenally well. When it comes to cheese and ice creams, the sector is growing in the range of 15 to 18%, and we have been growing in terms of volume wise around 25-28%, and we'll continue to see a higher growth going forward also.
So just taking a cue of cheese that you just talked about, it is expected to be a major growth engine following the new capacity. What revenue growth and utilization levels are you targeting for the cheese business over the next 3 to 4 years?
As far as the cheese in India is concerned, it is limited only to processed cheese and mozzarella cheese. That's what the Indian consumers are, familiarized. But as far as Milky Mist is concerned, we have been, as a part of our IPO process, we will be investing heavily on natural cheese varieties. So that will be part of the thing. So in next 3 to 4 years, we will have some more cheese varieties coming into our category. And the current, we didn't have any expansion of the cheese when we put up the new plant in 2018, way back. So we put up the cheddar cheese manufacturing plant in last year. It has come into operation since last 3 months. And currently the capacity utilization is 20%. And Yes, we have been growing in terms of volume about 20-25% on cheese category. And definitely there's a lot of headroom for us to cater to the market and make use of the available capacity from 20% to something like 75-80%, maybe in another 4 to 5 years down the line.
All right. Now, the IPO is deploying 470 crore towards plant expansion and 155 crores towards coolers. What incremental revenue capacity will this investment create, and what returns do you expect on this capital now?
So the returns will be in this range only what we have been reported as far as the EBITDA margins and the PAT is concerned. But with all the new products, what we have put into our IPO proceeds, like building the capacity for the protein range of products like whey protein concentrate, and putting up the VC coolers and all those things will definitely generate additional revenue to the extent of around 11 to 12,000 crores going forward. Okay, but of course, all these plants will come into operations from now, 12 to 15 months from now. So it takes time, but still, our existing product portfolio category of 22% are growing volume-wise, and the value-wise about 30% CAGR since last few years, and will continue to grow in that range.
Now, the company, of course, has currently 3.7 lakh plus retail touchpoints and over 4,000 distributors. How much further can distribution really expand, and what is expected of the cost of adding the next 1 lakh or so outlets?
Basically our 70% of the revenue comes from South and 30% is coming from non-South. So if you look at it, last couple of years, we have expanded our distribution capabilities from 2,000 odd numbers to 4,000 numbers right now. Similarly, from 2.75 lakh retailer touchpoints to 3.75 lakh retail touchpoints as on today. So going forward, since we are also getting deeper into the existing market, deeper penetration, and also expanding our markets, the growth of distributors also will grow in tandem with the top line growth. That is number one. As far as the VC coolers and market infrastructure is concerned, yes, we have already provided 135 crores, for market building infrastructure facilities over a period of next 3 years, and so we'll continue to add another, something like 25 to 30,000 VC coolers every year, which means about 10 to 15% of the retail outlets we are going to add. So our retail expansion will continue to happen in the range of 20-25% addition of the retailers into the fold. And again, the building the market infrastructure through the retailers across the country will also help us to improve our the top line. When it comes to the bottom line or the margins, what we talk about, there is a slight difference between south and north, but that takes care of our economics, because the company own and operate our own logistics. So while the trucks are coming back from the farthest distance, we are able to optimize them with a return load. So we are able to save something like 18 to 20% over there. So overall, about 1.5% of the margin, the difference between South and non-South will get offset because of the product range what we are marketing across.
All right. Now, with 497 crore of IPO proceeds earmarked for debt repayment, how will the lower leverage change your ability to fund capacity expansion and improve cash generation going forward?
We are, but we will be repaying about 497 crores back, to the lenders, and the remaining roll will be around 800 crores, but which has got an interest subvention of 3%. So that is Government of India, from Government of India. So we will have an interest for that particular 800 crores loan is around, around 5.5 to 5.4%. So that gives us a lot of saving on the interest outgo, and also a lot of saving on the principal amount outgo. So that is number one. And number two, because now we will be having a lot of headroom and product availability, that will help us improve our margins, and that will also help us to improve our bottom line.
Right. Dr. Ratnam, thank you very much for speaking to us on ET Now, as you list today at an 18% premium.